The broadcast is now starting. All attendees are in listen-only mode.
Hello, good evening, everyone. This is Sherry Zhao calling all the way from California, beautiful Long Beach here. And as I enjoying beautiful weather, this is our every week our team night. I do get it together with our team members every single Monday night at 6 p.m. PST, which is California time, and 9 p.m. Toronto time. We have very special webinar tonight. You know, normally we're doing a lot of business training, but tonight is the tax training. You know, it's something that's very related to us. You know, we wanna, like, this is tax season already. A lot of you probably overpaying money to Uncle Sam. I don't know how much you love Uncle Sam. I respect Uncle Sam, but I don't want to pay him too much. So I found a way that can save me money from Uncle Sam many years ago. And through this opportunity, I actually met a gentleman. You know, I cannot really teach what, share the same information this gentleman is going to share with you, because I don't have this credential. I don't have this specialty and background. So what I found is that this gentleman actually has all the background, all the credentials that we need to share with you the information that you really need. So, you know, as you already see his name, Mr. Robert Watterson. He is actually a professional, a federal licensed taxation professional, a provincial licensed financial professional with over 30 years experience in government, corporate, and personal finance and taxation in and outside of Canada, and trained by Canadian Armed Force to investigate financial transactions of Canadian and other government and institutions. And he's also trained at investment funds institution as advisors, financial business in the college, and and he's also a certified accountant. QuickBooks and QuickBook Online, and so that, like, go on. You know, this is the best person I can invite to teach us, you know, how you can put the hammer away and get the taxman to pay you. So, Mr. Robert Watterson, are you there with us?
Yes, I'm here. Can you hear me?
I can hear you loud and clear. It's my pleasure to host you, to have you online with us. Please take it away. Thank you.
Well, thank you very much, and good morning, good afternoon, good evening, wherever you happen to be in the world. I do have to let you know right away, I've never done this before on the internet, so it's a new thing for me. So we'll give it a shot and see what happens. And first thing that happens is my clicker doesn't work.
It works on my side.
Hang on one. We were changing screens before, and now it will not. Let's do this. No, hang on one second. For some reason, we don't want to change screens.
You know, Robert, just press, click on your mouse, on the mouse again. I think you have two PowerPoint opened.
Here we go.
Here we go.
Okay, so getting the tax man to pay you. Sorry about the hiccup there at the beginning. For some reason, my thing didn't want to move forward. I guess it really didn't want me to tell you about this. I think the government must be controlling my computer tonight. The introduction that I usually go through is an awful lot of what you've already heard. I am a federally licensed tax professional, a provincially licensed financial professional for the province of Ontario. I have over 30 years experience in government, corporate, personal finance, and my wife and I own our own financial firm called Watterson Financial Solutions in Ontario. Everything we discuss tonight is in general. Okay, I have to let you know going in that everything is just approximate. It may or may not apply to you exactly. Therefore, you are responsible to get your own tax advice when you look at the numbers. Everything in here is for your information. Okay, so why are you here? It's hard with on the internet when I can't actually see you, but who here likes paying taxes? I'm guessing that most people are here because you don't like paying taxes. Especially in North America, we pay a lot of tax, and most people feel they pay too much tax. And in Canada, which is very similar to the United States in how we pay our taxes. In Canada, we pay federal and provincial income tax. In the United States, you have state and federal income tax, and in some locations, you even have local income tax. So Wikipedia has all kinds of information about that. One of the things people don't always realize is how much tax they're paying because of the way the government hides the taxes that we pay. We pay taxes on licenses and fees, even things like hunting licenses, fishing licenses, driver's license fees, renewal for your license plates. Everything that you do, you pay tax on. Now, when you buy gas, both in Canada and the U.S., there are federal taxes on it, there are state and provincial taxes on it, and there are excise taxes on top of all of the taxes. So we pay tax on tax in some cases. That's why when the Forbes magazine does their survey every year to see when is your tax-free day, we realize that it takes until usually a day in June or July, depending upon what state or country you're in, before you start working for yourself. Prior to that, you're working for the government. Everything you earn technically ends up in the government's hands by the end of the year. So in Canada, you can go to CRA to find out how much income tax rates are. In both Canada and the U.S., tax brackets have been done away with for over a decade. So there's not really a tax bracket anymore. If you earn over $30,000, you pay the X amount of, or if you earn over $50,000, you pay X amount of percentage. That no longer exists due to all the tax deductions and tax credits and tax loopholes. But you can look at your pay stub if you have a full-time job, add up your state or provincial tax along with your federal tax, along with your Canada pension plan and EI, or in the U.S. you have Social Security, and I'm not sure if everybody has an employment tax or not in the U.S. Right? So you have those things. You have to add them all up to see what your pay stub taxes are. However, that's only the beginning of what you're going to pay in taxes. That doesn't include all the licenses and everything, and that's only an estimate because the actual amount of tax you're going to pay will be calculated when you complete your 1040 or T1 General in Canada. So, Economics 101. I like to ask everybody this question. However, I'll go through it and tell you the answer because I can't see, I don't know who's answering how because I usually wait for everybody sitting down to talk about it. So,
actually,
would you rather
Robert,
have
if you
$1
like,
saved?
hi, Robert.
Oh, yeah, I can hear you.
You know, if you like, we can have people have their hands up to participate, or there are ways we can have people to participate on the webinar.
Oh, I would love that because I don't like talking to myself.
Right, right. So if you have any questions and if you want people to participate, you can ask, those ones who like to participate to have the hands up. They can have their hands up here. We can see it. And then we can unmute them. Or if they have any questions, they can put in the chat, and I can, read the questions for you.
Okay, so the first question is, would you rather have $1 saved or $1 earned? How do I get some answers to that question?
Well, team and people, if you like to answer that question, please type in the chat box, and I can read it for you. Or if you like you to have your hands up, I can unmute you for the sec. But I think in the chat will be great.
Is my screen okay the way it is right now?
Absolutely good. Yes.
Perfect. Okay.
Yeah. So for anyone, if you like to have $1 saved or $1 earned, that's a good question, right? So we had people saying $1 earned, and Allison said saved, and Hazel said saved, and Raul said earned, and MTL said saved. Stella said saved. So we have 1, 2, 3, 4 people said saved, and then two people said earned.
Okay, so let me tell you the difference. I like doing this when I have a live audience because I can see who fell asleep. Because let's face it, numbers are boring and taxes are worse and sometimes scary. But $1 saved, depending upon where you're saving it at, is worth $1 plus a tiny amount of interest. $1 earned today is worth about 67 cents. So it doesn't matter whether it's Canadian or American, $1 is $1, and taxes are pretty close to even. Actually, Canadian taxes are a little bit higher, but you're looking at $1 or 67 cents. So for me, I'd rather have $1 already saved than to earn another $1.
Very interesting.
You know what? That may be what doesn't let me click. Let me see. No. Hang on one second. It stopped clicking again. My computer does not like me. One second. It won't. There we go. Okay. Every time I open up the this browser, it shuts down my ability to control the.
All you need to do is click on the PowerPoint again, because you're out of PowerPoint. That's why.
Yep.
You just left click on the PowerPoint itself. Here we go.
Okay. So no, can I go backwards? Yes. Right. There we go. Would you like to learn the benefits of having a home-based business in relation to saving income tax? And a lot of people think that by saving income tax, we're talking about having tax refunds. Whereas in reality, all we're doing is trying to increase your deductions. As your deductions from your taxable income increase, the amount of tax you pay decreases. So it doesn't always mean a tax refund. What it means is more taxes or less taxes paid, so more tax savings in your pocket. So a lot of times you have to be careful when you're talking to your accountant. You're not looking for tax refunds, you're looking for tax deductions. Okay? Every North American who works a full-time job and does not have a home-based business is probably overpaying their income tax by $3,000 to $9,000 every year. In Canada, it's $4,000 to $11,000 based on my estimates. And Sandy Botkins, who is a CPA, he has written several books as well as a tax program called TaxBot. He's a tax attorney and a former IRS general counsel, as you can see, is the person who made that quote. So it is very common to both the IRS and the CRA that tax is overpaid by anybody who doesn't have a home-based business, and actually our tax rates are set up in order to encourage small, startup, and home-based businesses. So what types of expenses can you claim? Let me see if I can bring that part up again. Did it again. I'm not going to bring that up anymore. So what are the rules on what you can deduct? This is the hardest part, and this is where some of us make mistakes. Some things in life are difficult. Taxes are one of those things that are difficult, even to tax preparers. One of the things that's difficult with taxes is that there are several types of taxes and several types of tax professionals. The same as there are several types of doctors and several types of specialists. So if you don't understand business tax, the tax preparer or accountant tends to tell you to go on, don't worry about that business, don't claim it this year, you didn't make enough money, or the government won't let you deduct unless you make a certain amount of money and everything else. All of that is unacceptable. The law actually states in both Canada and the U.S. that you must declare all income from whatever source. And if you're going to have to declare your income from every source, you can also claim your deductions from every source. So we want to move and make sure that we do that in the beginning as well as later on, because you may today be a retailer or a silver and you're not making a lot of money yet, but you're building a great residual income. Later on, when you're going to pay income tax, you need to have had the savings in advance. So CRA has some business information about that. It's about 17,000 pages if you want to read it. The United States has it as well, and I have no idea how big theirs are because they have a different set of rules for every state. So this is a list here. Can you see that, Sherry? Sherry?
I mute myself. Yes, I can see. Yes, everyone can see it.
This is so clear. Yes, we can.
Okay. Can you see the list there?
Yes, we can see the list. Very clear.
Okay. So what I'm going to do, this is a rough list of tax deductible expenses. In both in Canada and the U.S., these work. I'm going to go to a form that will add this up for us. I'll just need some input as to what everybody thinks that their cell bills and internet and everything as we go through it would cost them per month. Let me just click into that. My mouse is not working. So on our cell bills, how much per month average do we figure we're paying on cell bills?
Do we have anyone like to participate? Okay, Thea said her cell phone bill is $70, and Adam said 90. So, and Raul said 130.
So let's say 90. We're pretty close in the middle of everybody there.
Okay, yeah.
90 a month. Okay. How about internet? If it isn't included in your cell bill, how much per month are we paying for internet service?
Tia said 60. Adam said 60. Anyone else? We need a third person. I think my bill is about 62. Internet.
60 sounds good.
Yeah.
Car and transit, we're going to bypass for a few minutes, and we'll come back to this.
Okay.
Meals and entertainment. Now, meals and entertainment are anything that you do outside of the home, which enhances your ability to run your business, enhances the appearance of your ability of your business, or helps to show anybody what your business is like, or for you to sit down and talk to them, introduce yourself. So pretty well, as soon as you leave the house, anything you do that includes a meal or entertainment is tax deductible. Now in Canada we're only allowed 50% of that. In the U.S. the rules are a little bit different depending upon the state because that is a state controlled. As a rule we can do up to 85% in the U.S. I believe. But we can use 50% just so that we stay conservative. Anybody have an idea how much they would spend per month or per year on meals and entertainment if it was partially tax deductible, or how much they are currently spending?
We have Adam said $200 a week, and we had Thea said $300 a month for herself. Anyone else like to participate? How much you spend on a meal just a month, like outside? Like for myself, I would say probably around $400
Per month?
And Raul said $300 a month, yeah. And Adam is the one like I think he spends about $800. Also $600 he said, $600 a month.
Okay, well we'll stay a little more conservative and let's say $200 a month.
No, there are people
$400 a month
between 300 to 600. Oh, you mean half of it already? Okay, go ahead.
But see, 400 would be 200.
Yeah.
And 600 would be 300. So we're fairly close either way because we can only claim half.
Right.
Right. So it'll work out either way.
Mm-hmm.
And if you are spending a little bit more, well, that's okay. That means you have the ability to write off a little bit more when you come to tax time.
Right.
And once you're spending it and earning money on a different a place you've never earned money before, you'll spend more money anyway, we hope. Now, office. When you look at office expenses, this is very confusing to a lot of people because they don't realize what office expenses are. So if you actually go into an office, even if it's a bedroom office, you have to look at the fact that when you sit down, you're going to sit on a chair. You're going to sit in front of a desk. You're going to write with a pen. You're going to type on a computer. You're probably going to print off on a printer. So ink, paper clips, desks, computers, printers, and of course when you buy a printer, it's a really inexpensive item, and then you go to get the ink for it and find out it costs twice as much as the printer did. The ink is tax deductible. So what we need to do is figure out how much your home office costs you to run in just supplies. And that includes the paper, everything that you do. Any ideas?
We have Tia said $150. I haven't seen anyone else yet. What's your number? Please type in. But right now, 150. Yeah, we got a couple people say 150. Thank you.
Okay, well that's a very reasonable number. The next thing we have is travel. Now, I always like to tell people that there are 3 ways to travel. It doesn't matter where in the world you are. You can only travel 3 ways. You can either pay to travel, you can get paid to travel, or you can travel for free. So we all know how to pay to travel. That means you buy your ticket, you go to your resort, you go to your beach, you go wherever it is that you're going to be, and you spend your week or 2 weeks there. You come home and you're flat broke and you go back to work. That's paying to travel. Getting paid to travel, you take the same trip. While you're on that trip, you talk about the exciting business with a few people that you get to know, and you're having fun with your business anyway, so you want to spread the news about it a little bit. You may even end up making money. I've heard of one lady who went to Mexico, showed somebody her watch. Oh, sorry, her shields. The lady liked her shields so much that she ordered them online, went home to Germany, and has set up an amazing home-based business running out of Germany, just because this lady went to Mexico. So when she got home, all of her expenses for that trip are tax deductible. So if you spend $1,000 and you're paying 30% in income tax, you get $300 of your $1,000 back. Based on that type of travel, how much do you or would you, if you could, like to do? Did I lose you?
No. We have people saying $1,000 a month. So $1,000 a month go to travel? I don't know, like maybe $1,000 a year, you saying, or $1,000 a month? I personally, every year I go, I probably spend like about around $5,000 at least on travel expense.
So why don't we say $400 a month to keep it fairly reasonable.
Yeah.
You can always increase it later if you want us to travel some more, and especially when you can afford to.
Right.
But to keep it fairly affordable, we can say $400 a month on travel.
Yeah.
If that's all right with everybody?
Yeah. Sounds good.
Now, promotion is anything you do in your business that lets somebody know who you are, what you do, where to find you, what to buy, what you like, what you dislike, anything at all. Normally it's in printed or introductory, like trade shows, business cards, flyers, brochures, anything at all that you put your name on. And any piece of paper you print, put your name on it. Any catalog you buy, put your name on it. Always, always, always tell somebody who you are on every piece of paper that you produce. Even this one that you'll see that I'm working on here, because when I do live demonstrations, I hand out these forms. They have my name on them so that I can write them off. Just makes perfect sense. So assuming all of that, including banners, flyers, trade shows, what would you say per month or per year you would want to calculate as your promotional expenses?
We have a question about that.
Yeah.
How about the domain name and hosting fee? Is that part of promotion?
I'm sorry?
The domain name and hosting fees. I mean, you can buy domain names on GoDaddy and to promote your website, promote your business online. So is that part of promotion?
Yes. Anything at all that tells somebody who you are. Definitely. And
okay.
Domains are a really good way to do that.
Okay. So what about I pay social media, say on Facebook, there's a ad you can do, and
right.
Is that a part of it too?
That would be included. I would normally put that myself under advertising.
Yeah.
But we don't use advertising on this form because we're using this for people who haven't been in business.
Okay.
But promotion and advertising are the same thing.
Okay.
Just to an accountant, sometimes we like to look at them a little bit differently.
Right,
but
right.
That would definitely be advertising and promotion.
I see. What about go to networking events? Is that part of the promotion too?
Yes.
So
absolutely.
If I spend like $20 for my meal at networking event, but not just go to eat, but it's a
right.
networking, so it's not part of the meal. It's part of the promotion, correct?
Right.
Okay.
Yeah.
Thank you for the
If
clarification.
you have to buy a $20 meal to be at the event,
yes.
Then it's not a meal. It's a fee.
Yes.
The meal comes free.
Okay. So it's a part of promotion too, right?
Exactly. Yeah.
Then
anything you pay for.
Right. Then I probably spend about couple $100 a month at least.
Okay, so we can say what, 200?
200, yeah.
Okay, so let's say 200. Now rent is sort of rent or home. This is the in-home office. Now some places in the U.S. you're able to write off the interest on your house on your income tax now. Is that still correct?
I'm not sure, but I always do in U.S. I do that in U.S., yes.
Yeah, so, but in Canada we can't. So that becomes a large portion of that. So all the interest that you pay on your mortgage is tax deductible in Canada as well. But when we look at rent or household, it depends if you're renting an apartment or a place, then we calculate 100% of the rent, and then we add it all up and then take about 20% of the total. Now the total would be rent or hydro, or rent and hydro, and any expenses, including things like parking fees. If you own your home, it includes, well, both ways. It includes insurance, property tax, renovations, maintenance, anything you do to the house at all is included in this total. And then we take about 20%, and we use that as a tax deductible amount.
Sounds good.
So do you have an idea what that amount might be, Sherry?
So there are people asking, what about the condo fee? You know, the management fee is part of it?
Yes.
Okay.
Yes.
And so mortgage part of it and condo fee are part of it. Property tax?
Mortgage interest only.
Okay, so property tax, no.
Yes, property tax as well. But on the mortgage itself, the mortgage interest
the mortgage
only,
interest. Okay, so not on
if you
principal.
pay your property tax in your mortgage, then yes, that part too.
Right. Okay.
Yeah.
So people saying, you know, mortgage is $1,300 and total about $2,200. HOA is money. It's like HOA. It's like a management fee in U.S. So it's same thing. So management fee, just like a condo fee or whatever you call it, same thing. So that's part of it. So we have people give a number around 2,000 for total. So 20% of the 2,000, correct?
Would be $400 a month.
$400 a month. Yeah, property tax is part of it, Kelly. I got it.
Oh yeah, definitely property tax. And if you own your home and this year you have to put a roof on,
yeah,
that counts too.
Okay. So what about all the renovation that I need to do for the place?
Yes, because they're all for adding benefit to your business, not your baby.
Okay. A baby is read off as well, I know.
Yeah,
in US.
well, you have to have everything. If you have somebody come into your home and you cannot put, and you do not have a good presentation, the chances of them doing business with you is greatly diminished.
That's true.
So if you add a pool in your backyard, believe it or not, you can include it.
Right.
Only 20% of it, but you then have to have meetings around your pool, which why wouldn't you if you could?
That's right.
We have actually done it, yeah. And it's cold up here as a rule, so we
okay.
put when it's warm out.
That's good. Thank you. Oh yeah. They're saying general household repair like plumbing is part of it.
Yes, that's maintenance. Yeah. If you spend it, we count it.
Yes.
Yeah.
As long as you have
receipts. Spend
receipts.
money, we want to know about it.
Right. Okay. So there's one question that's not related to this ritual to the rent, but let me bring this up. So if a U.S. nation, if as a U.S. national is working outside of U.S. and has an annual salary less than 100K, does he still have to pay any tax? I don't know.
In the U.S.?
If U.S., I think it's a U.S. citizen working outside of U.S. has an annual salary less than 100K, does he still have to pay tax?
That is actually most of the countries that you can do that you work in on a national basis as have tax treaties with the United States. Believe it or not, some of them are higher, some of them are lower. It depends if it's in the oil industry, a safe job, or a dangerous job. You must, however, file a 1040 no matter what. But you will have out-of-country, and this the same thing applies to Canadian nationals, if they're listening. If you must file a tax return for the United States or for Canada, you must declare your worldwide income, and then you need to look at the exemptions that are in place for what or where you are. So for example, Dubai, it is $100,000. If you are working in Dubai and you earn more than $100,000, you will pay tax in the U.S. on the excess of $100,000. But the first $100,000, unless you're in a special contract, would be tax-free. But it depends exactly on where you are, because I know that in Saudi Arabia it's a completely different amount. I know that if you're working on an oil rig that in offshore and then not in a international, like in international water, again it's a different amount. Right? So those are loopholes dependent that you must check into.
Good to know. Thank you so much.
With the next one I have is business, and depending upon what type of business you're in, you want to have business expenses. Now I usually put in a number at around $3,700 per year for here, simply because of the type of business that we're talking about right now, is a small home-based business that doesn't have huge overhead or in a lot of inventory or anything like that. So are you okay with that if I put in $3,700?
Yeah, I think that's actually perfect. Yeah.
Okay, so we're going to talk about something a little more complicated now. If I can get my computer to work.
We have one more question from someone saying,
Sure.
My hydro bill is under my roommate's name. Is that deductible?
If you are paying it, it doesn't matter whose name's on the bill. And, you know, maybe you want to get your roommate into business too.
That's a good idea.
But yes, if you're paying the bill, technically you can claim it. It doesn't matter whose name it is. That also applies to auto insurance. I get that question quite a lot, especially from young people who can't afford to pay to have their car in their name. So they have it in their parents' name. If you're paying the insurance, you can deduct it. It doesn't matter whose name it's in. However, only one person can deduct one expense. Okay? So if both of you are in business, you have to cut it in half or one of you claim it. Does that make sense?
Yes, got it. Thank you.
Okay, so this is where it hurts a little bit, where we have to look at things like monthly auto insurance. Roughly per month, how much do we pay for auto insurance? Any ideas?
We have people say 180. We have people say 120, 160, 350. We have people say 120. So I know my bill is about it's around 150, I think. So,
okay, so we can use about, we can say 160 even. That sounds pretty good.
160?
In Canada, auto insurance tends to be 2 or 3 times that amount per month.
Yeah.
Depending upon how many cars you have in your age and stuff.
True.
Fuel also in Canada is much different than in the U.S., but what would you say roughly per month that you would be paying for fuel?
I know Canada is quite more expensive than U.S.
Yeah.
For me, I say around 200.
200 per month?
Yeah, 200 a month.
Okay. How about maintenance on your car?
Maintenance, guys. How much you pay maintenance? I don't know. A month? We don't do a monthly maintenance, right? Like say roughly say spend about 500 a year.
Okay, so
there are people say $50 a month.
Yeah, we can say $50 a month. That's pretty reasonable. Now, what we do find that your maintenance is low if your car is new.
That's right.
The maintenance is higher as it gets older. It's sort of like people.
Right.
However, the cost of owning the vehicle in the leasing or financing is usually higher when the maintenance is lower
That's
and
true.
lower when the maintenance is higher.
True.
right?
Yeah.
So it offsets each other. What would you say is the main, would you say people mostly lease or finance?
I don't know. Like I finance. I don't have lease. So
Right.
we have TSF finance too. Anyone else? I don't know. Finance. Raul said finance.
So with financing, how much would you know how much interest you pay per month, or roughly, or the value of the vehicle?
I pay $350 for mine.
So you pay $350 principal and interest per month on your vehicle?
Yes.
Now, because you own your vehicle, we can also depreciate it.
Right.
So although you're paying $350, we can't write off the full amount because some of it is paying off the car, but some of it is paying the depreciation and the balance is interest. So if you're paying $350, I would say around $210 per month would end up being deductible.
Only?
Right? Because we can, if you're on a lease, we can write the entire amount of the lease off.
Oh, okay.
But if you're on a finance, you can only write off the interest and depreciation.
But
you
what
can't write
about
off
one of my
depreciation
car?
if you're leasing.
One of my car is 0% interest, so I cannot write off anything.
No, then you can't write off anything.
Oops.
You don't pay it. You can't deduct it.
Oh, okay.
Right?
Yeah.
But on average, you're probably sitting at around 210. Do you want me to lower or increase that number?
No. Like, okay, there is Raul said he's paying 2.99% as interest.
Right.
Yeah. And yeah, Tia said, Sherry, we should lease. And Adam said, what do you suggest, lease or finance?
It really depends on the deal that you get and what you prefer. Some people don't want to pay for the full vehicle. And in leasing, you only pay for 60% of the vehicle, but you get to write off 100% of the lease amount per month. When you finance it, you get to write off the interest, and you get to depreciate the vehicle. With leasing, you can't depreciate. So it really comes down to personal preference and your interest rates. So if you were getting a purchase of 0% interest rate, and I would purchase. If you're leasing and you're going to get a 0% lease rate or a 2.99% finance rate on the same deal, I might look at the leasing side, simply because the deal may be better in the long run.
I see. That's very good.
One of the things that I do like people in financial planning portion of what I do is to be very careful about tomorrow. When you lease, you have a bill tomorrow, right? There's a balloon payment at the end of the lease.
Right.
If you're going to keep the car, if you're not going to keep the vehicle, then you have no trade-in value for that vehicle either. So it works sort of either way.
And someone asked, can I claim snow tires as a car maintenance?
Yes. Yes, anything you spend on the car, tires, filters, car washes. If you put a magnet on the side of your car, it's a promotional expense. Don't forget to claim that stuff. All of those can go in there.
Right? I like that. Thank you.
Especially you want to keep your car looking nice when you're using it as advertising. So you definitely want to claim car washes.
Very good point. Yeah, I wasn't sure.
Like a Canadian car.
Right, I wasn't sure if a car wash can be claimed, because you know, it's kind of like just to clean it, you know.
It does, but your cleanliness and how you appear puts your image across to people.
Sure.
You are in the image business.
That's right.
So if you have a good image or an okay image, where are you going to make more money?
Right, right.
So that's why it would be logical to claim car washes.
That's true.
you're in an area of high salt or in Canada, because you're also protecting the vehicle by washing it.
True.
You're keeping the vehicle will last longer. So it's maintenance as well. So is everybody all right with those numbers?
Yeah, sounds good. Okay, there are people ask, what about attire like shoes, hair, nails? Can we claim as a business expense in Canada?
Yes and no, depending upon what you're doing. If you have a show coming up, definitely. If you have a party or something coming up, yes, you can prepare for it. Conference, you can buy clothing, a dress for conference dinners and stuff like that. Those things can be claimed. If you want to buy socks because you like them, we can't so much claim them. But when it comes down to your appearance and everything for a fashion industry,
Right.
absolutely.
Right. Interesting. So nails and hair you can claim too?
You can claim them. It depends on how often you do it and what you're doing it for. Right? If you're doing it for yourself and you're not going to be seeing clients for a month, then probably not. But if you have a show, for sure. Definitely, if you have a show coming up, you don't want to go there with broken nails.
Right, right. So we can do like maybe like twice a year for some, just be reasonable, correct?
Yes, yeah, 2, 3 times, 4 times a year.
Yeah.
The other thing you can do, if you're not quite sure how much you can claim, is you can buy some gift certificates.
Okay.
Right? There are ways of using gift certificates that can get very interesting.
Right, 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 right.
For a nail salon or for any place where you spend money,
right.
You can buy gift certificates and use them as promotional items.
Ah, I like that idea. Okay.
And
Kelly is asking, like, she's saying, what about for the weekly tours, weekly tour that she's like they are doing in Winnipeg? Can they do like nails and hair every week?
probably not every week. You wouldn't get away with it, but once a month for sure.
Okay.
Right? Because it comes down, it also depends on how much money you're making, right?
That's
because
true.
if you're Rene and you're flying all over the world, you can write off a lot more travel than somebody who has a retail. So it depends on what you're doing in business as well.
That's true. Very good.
Right? And the higher your business takes you, the more it's going to cost you to maintain that level.
Right. That's good.
Okay,
yeah, this webinar is recorded. I'm going to send you the recording afterwards if I can successfully upload it. So don't worry about. Yeah, there are people asking that. Thank you.
Perfect. Okay, so on here we now have, what I've done here is calculated the car at 50%. The car is actually claimed, we want to keep a mileage log of how much mileage you use for business. But if you're using it for 50%, this gives us a good idea. If you keep a mileage log that shows you're using your car for 80% of your business, then you'd be able to write off a little bit more. But I keep it a little bit conservative here at 50%, just in case somebody from the IRS is listening. I'm just kidding. Everything we do is very, very straightforward and legal, so I'm not worried if they are. When you know, well, get this thing to cooperate, and go here. You'll notice down here that the total for the car expenses has come to $74.40, and we cut it in half to $37.20, and then that $37.20 automatically appeared up here in our transit and car. Now the reason I have transit and car there is that there are people who use public transportation instead of owning a vehicle. And if you're using public transportation to do your business, you can claim it as an expense. So just so that everybody's aware of that. When we bring all that together, we come up with a month or an annual costs of around $25,000 worth of expenses. Most of these expenses are money you're already spending whether you own a business or not. I think most people would agree that that money is coming out of their pocket no matter what happens. If anybody doesn't agree, go ahead and say so.
So I have a question.
What I do down here.
I have a question. I have 2 cars that I'm using.
Right.
So I use both cars for business. Can I claim both, or I can only do one?
No, you can claim both.
Okay.
Again, you must keep a mileage log.
Yeah.
Right? If you keep a mileage log on both vehicles, you may use one 60% of the time and one 5% of the time.
All right.
We can do both vehicles separately and claim the appropriate expenses.
Okay.
And that's the way you should do it.
Mm-hmm.
Now we've put in a few tax brackets right over here that are not very accurate, to be honest with you, but they just give us a number to work with, and they're very conservative. I usually say that most people earn between $31,000 and $80,000 and are paying, well, usually more than 31%, but they're paying at least 31% tax if they have a job. Would you agree with that?
Yeah, for sure.
So if you are in that situation where your tax rate is 31%, do we have a question?
No, my daughter just participated. Sorry about that.
I was trying to tease you. So if you have a home-based business and you're not spending much more than you would normally be spending, you're going to see tax savings or a return on your expenses of about $7,880 based on 31%. Now, if you're already receiving a refund, this would be in addition to any refund you're already receiving. If you're paying tax at the end of the year, this would be deducted from the amount of tax you would end up paying. So if you normally pay $4,000 in income tax at the end of each year, now you'll pay, or now you'll get $3,800 back in this case. But if you normally get $3,000 back in income tax at the end of the year, now you'll get $10,880. Does that make sense?
Yeah, absolutely.
So at that point, is there any questions on just how we calculate the expenses and stuff?
People, you have any questions, please type it in. I can read for you. So, okay, no, everyone is clear, I guess.
Okay. We'll go to the PowerPoint.
Yeah.
And continue from current slide. And go ahead one slide. So the more important part, and this is where it gets very real, is we have all those expenses we can claim, but how do you track them? And how do you know which ones you can deduct? Because I don't think you want to read the 17,000-page booklet. You have a rough idea now, but what you need to do to be able to go forward from here, and the most important part, when or if you are ever audited, how to successfully walk through that audit and have no worries at all. That is what I would want anybody to be able to do. So the first thing I say is keep everything. Now everything should be in great big huge bold letters and underlined. If you are paying 31% taxes and you have a receipt in your hand that's worth $100 and you're not sure if it's tax deductible or not, so you crumple it up and throw it in the garbage, you just throw in $31 into the trash can, potentially. If you hold on to that receipt and ask your tax professional at the end of the year, is this tax deductible? And they say yes, it goes on your return. If they say no, it costs you nothing really to hold on to it until that time. So keep absolutely everything, especially if you're not sure if it's tax deductible. That means all of your receipts, all invoices, all bills, everything. The main thing that I like to remind people, because they forget about it all the time nowadays, is we pay for a lot of things on the internet. When you pay for a promotional booth or a bill or anything like that on the internet, print off the receipt. When you pay it through the bank, they automatically have a receipt there that you can print. First of all, the paper you're printing on is tax deductible anyway, so go ahead and use it. Secondly, you're not going to forget that expense at the end of the year. If you pay $250 to be in a booth, that could be $90 or $80 in your pocket, right? So keep everything. Be detailed. In other words, keep records right on your invoices, right on your bills, right on your receipts, what it's for, who it's for, when it was. So keep track of everything. Become a reporter with your receipts. Who, what, when. There are online tools that you can use, tools like TaxBot or online QuickBooks Online, which will help you keep track of your expenses. If you pay all your expenses through credit card or debit card, there are tools that will automatically download those expenses into an accounting program for you. Most of us carry smartphones.
Sorry, Robert, there are questions about what about the receipts fades, which happen to a lot of people. The receipts like fading away, like the cannot really see. So what can people do on that?
So you mean like if 5 people go out to dinner? Oh, fading?
No, the faded, the receipt like getting old and faded, or the print is no good, the ink is no good on the receipt.
Right. That's not something that might happen. That will happen. On the next page, I'll get into a bit of detail on that.
Okay. Can the people use their like bank statements or credit card statements instead of receipts?
Not instead, but as well.
Okay.
Okay. Because a bank statement is not a source document, but it is a backup to a source document. So if you have an expense and you're not quite sure the amount, you can't read the receipt or something, but you can read part of it, it can be a backup. But I have better ways of dealing with that as well.
Thank you.
But what if you lost the receipt? You can still use the amount from your bank statement. The chances of CRA or IRS asking for that one specific piece of paper is pretty slim. So go ahead and claim it. Worst case scenario, they come back, you can't find it. If it's a credit card, by the way, your credit card company will send you a copy of the receipt if you request it. Sometimes you can get that information from the bank as well, and Revenue Canada will accept those things. We also carry smartphones with us most of the time. Take a picture of the receipt. Photos of receipts are now considered source documents and are allowed to be used for taxation purposes. So if you take a photo of the receipt, it won't fade. Most of the online tools will save that receipt photo for you and not on your computer. They save it in the cloud so it's not taking up space on your computer hard drive. So you don't have to go out and buy a huge, huge hard drive. Right? Some of them will, like TaxBot, you take a picture of the receipt, it enters the information for you. On QuickBooks Online, your bank statements are automatically downloaded, so it just depends on the type of program you like to use. So the other way you can do it is with a simple spreadsheet. Just a piece of paper with lines on it that helps you to keep track. There's iPhones and Android apps that help you, that can keep track of everything for you. Now, one thing we do need to look at is a car mileage tracking logbook. You should keep track of your mileage in your vehicle. Now, the easiest way that I've found to teach people to keep track of their mileage is most cars now have triptychs. So if you're on your way to see a client or you're on your way to a show, you have a piece of paper in your car. You write down where you're going and what the date is. You set your triptych to 0, and you're on your way. Go, have fun, do whatever you're going to do. Don't worry about anything else. When you get home, write down the mileage that's on your triptych and reset it to 0.
I maybe have to be guilty about that. Every time I know about it, but a lot of time I forgot to do it. So what can we do after?
Okay, well, just in case the IRS is listening, Harvey, we just kidding. That is the most common thing,
Uh-huh.
and I really stress try to keep a logbook,
Right.
especially as your expenses start to climb,
Yeah.
because they can ask you for very important details from your logbook.
Right.
I have one client who was audited who was not in a small business but gets paid mileage from her employer, and all she did on her logbook is said from home to client, from client to this to that, and they refused it because it didn't have enough detail.
Oh,
On
yeah.
part of it, they asked what was the time of her trip. Actually, I wrote in there, none of your business. They accepted it. It is none of their business. But you do want to keep as much detail as possible, because if they want to, they can disallow all of your car expenses if you get into a dispute with them over a log.
Right.
Right? If you keep a day timer or a planner, that will help you keep a log as well. You can even just note in your day timer how many kilometers it was or how many miles it was. But
Right.
we can and do quite often average based on what type of business you're doing and everything, but it's not the recommended way, right? There are ways we do things and there are ways we have to say to do things, right? You understand? You know what I mean?
Right. I
Sometimes
mean,
you have to
I
read
know,
the law.
I know about it for a long time. I just like sometimes it's just in a rush to go somewhere. I mean to do it and I forgot to do it, and a few days later, oh, I didn't write it down.
True, it happens. If you can estimate the distance, write it down as soon as you remember it. If you
Right.
get into a habit of doing it,
Yeah.
it just becomes automatic.
Right. Right.
It takes 2
Okay.
weeks of doing it every time you get in the car, and you'll never forget to do it, or you'll rarely forget to do it.
True, true, true. Yeah,
Right?
there are Android apps and Apple iPhone apps about how the log as well. So for the people
Right.
who are pretty high tech, you can download the app and do it.
Right. 12-month folio. If you don't like to keep track of your receipts, you can get a folio that has January, February, March, April in it, and just drop your receipts in that every month. I do recommend going back and totaling it every month because it's a lot easier to do it once a month.
Mm-hmm.
So what do you want to do to just recap and to expand a little bit is write down on your receipts everything. Who was there if it's a meal? Rewrite the date and the amount of the receipt.
Oh.
Okay, so if you have a receipt and it's going to fade because you will not be audited on something that happened last Tuesday. If you're audited, it's going to be on something that happened 3 years ago. Your receipt will fade, like we were mentioning before. So rewrite the date, rewrite the amount, and write on it who was there, what it was there, and all the integral parts. But don't forget to rewrite the date and amount. That way you know what it was for. Or take a photograph of it. If it's a meeting, what was the purpose of the meeting? It could have been an introduction, a tour or presentation, training, launchpad, tax training, compensation plan, anything. It's going to enhance your knowledge. It's tax deductible. Even if you're helping somebody to join or launch a business, it's tax deductible. Now the next one I kind of doesn't give you an awful lot of tax savings, or there's not a lot of expenses with follow-up, but follow-up, anything you do to follow up with a client is tax deductible. The thing is that if you follow up with your clients every time you, like regularly, you will have clients. If you don't follow up, you don't need to know any of this information because you don't have a business. Follow-up is the most important thing you can do financially, even though it's inexpensive. All right?
Good, very good. We do have a lot of questions.
Okay. We can go into some questions right now if you like.
Okay, so we have a question. The first question is, what about trips, international, like international trips? Like, what should I keep? Like the receipts of other currency or bank statement? Is that enough? Because you know, when you go to, say, even you come to U.S. You live in Canada, then the currency is different and it's different daily,
Right.
right?
Keep everything. If
Uh-huh.
it's in U.S. funds, write U.S. funds. If it's in euros, write euros on it.
Right.
If it's in pesos, write pesos. We can do the
Mm-hmm.
calculation of the exchange rate at the end of the year, or if you buy cash while you're away, you will get the exchange rate on that receipt. Keep the receipt.
Right.
The service fee to exchange your cash into another currency is tax deductible.
Right.
Keep the
And
receipt. That will give us the exchange rate. So if you pay for something in cash, we'll know how much it costs you in the currency that you're filing your tax return in.
right.
Right? So again, keep everything.
Right.
When you go on a trip, now this is where it comes down to the type of business you have. If you have a global business, you can travel anywhere in the world and it would be considered potentially business. Right?
Mm-hmm.
So if you have a business that sells in Afghanistan and you travel to Afghanistan, is it a good chance that it's tax deductible? Yes.
Right.
If you have a gas station on the corner of King and Main and you travel to Istanbul, do you think they're going to accept that it was a business expense?
Yeah.
Probably not.
Oh.
Because the gas station doesn't need to travel. So there
Oh.
depends a lot on what business. But
What?
when you travel, keep your boarding passes, keep your hotel receipts, keep your entry forms for the country,
Oh.
everything to prove you were there.
Mm-hmm. What
For a
about
couple of reasons.
say my husband and myself are both in the business, and we go out for meal like every week, and then we talk about
Right?
business. Does that count?
Yes. You don't. If you go out, once you own your own business, and you go out of the house and do anything, you have a coffee, you have a meal, you have anything at all,
Right.
spend at least a few minutes reviewing the business.
Right.
It's tax deductible then. You don't have to spend all day on it. You just have
Right.
to talk about it. Okay, I'm going to catch back up to where we were.
Right. So basically,
Right?
say you and your wife are both in doing the business together, and then every meal you go out to eat, that's tax deductible.
Yes. If one of you is in the business, every meal you go out to together is tax deductible. Because during that meal, you need to be telling your partner how things are going and how they can help you.
Oh.
And if you spend 5 minutes on that, or 2 minutes on that, or 4 hours on that, it doesn't matter. It's still tax
Oh,
deductible.
I like that. Okay. What about
Right?
self-development courses? You know, there are like courses like thousands of dollars we spend to you know, develop ourselves and you know, improve ourselves for the mindset or anything that's going to use for my business in the future. That
Right.
is that tax deductible? Deductible?
Yes. Yep. Depending
Where
upon
should I
where
put
you
it?
are and depending upon the tax rules of where you are, it can either be a tuition fee or it can be a professional development fee. Right?
Okay. Okay.
Yeah. But anything you spend to improve yourself
Right.
is definitely tax deductible.
Okay. Okay. So tax is called a professional what fee?
Professional development.
There is a section for that?
Yes, there is. Yep.
Oh, okay. Good.
The part I gave you was just a rough breakdown. When you do your tax return, there are a lot of different areas that we look at. We even look at conventions separately from travel and stuff like that as well, because some states and provinces have limits on the amount you can spend on a convention.
Mm-hmm.
So we want to have the convention listed all by itself so that it doesn't affect the travel, and so that the travel doesn't affect the maximum for the convention. So there's a lot more details than what we've talked about.
Right.
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 And so,
see, like for July 10th, we are going to have the forensic networker training. The $179 for the ticket, plus people traveling there, like flights and hotels. Everything is tax deductible.
everything 100% tax deductible, including meals. Even in states and provinces that will only allow you 50 to 85% deduction for meals, if it is a travel meal, it's 100%.
I like that. Okay.
So
good to know.
if you tip the red cap, it's tax deductible.
Okay.
Right?
Right.
Anything you do once you leave home on a trip.
Yeah.
Sherry,
Yes.
it's Obdulia. May I ask one question?
Go ahead, please.
I couldn't type it in because I was hasn't organized here somehow. I saw a question previously regarding the IA. So
Yes.
what category do we put the IA on the under expenses?
Well, that again depends a little bit on what territory you're in and what you're doing with your IA. Some people are buying product or putting their IA aside to buy products. Other people are only paying their IA because it gives them the ability to claim their group volume. If you're paying IA, and realistically you are paying it every month so that your group volume increases, it is a business expense.
Okay,
If
so
you want to use your IA to buy products to sell for cash, then it's an inventory. Either way, it's tax deductible. No matter what anybody tells you, the cost to get into the business, the annual renewal fees of any business, and the IA is tax deductible.
And is it also the initial, when you launch your BDM, like the $3,000? Okay.
Absolutely. Yeah. In fact, I tell people that if they came out to a meeting to find out how the business works, and they went to a tax training that night with me, and they sign up that night, the gas to get to that meeting is tax deductible.
Great. Thank you so much.
It's all there. You can claim everything. So then we talk a little bit about what else do you need. You know what you want to do as far as keeping your receipts and everything. So what else do you need to do? Well, you need to know that you're what's called a sole proprietorship. There are some people in home-based businesses that need to incorporate. We're only talking about sole proprietorships tonight. Corporations are a whole nother discussion. So you are a sole proprietorship. In Canada, you need to complete a T2125 Statement of Business, Professional and Commission Activities. In the United States, they have a similar form for small business activities. The forms have to be accurately completed or you will run into problems. Right? With CRA, there is some paperwork that you can read if you are so inclined to read that much paperwork. And you need to total your expenses. The reason I say that you need to total your expenses is when you go to do your tax return, when we talk about, for example, your auto insurance for the year, we need one number. So either you have that number or you're going to pay somebody to figure out what that number is to do your return properly. You understand what I mean?
Yeah.
Yes, I understand, and I think.
Okay. Yeah. Either you total it or you pay somebody to total it. So total your own expenses if you have the opportunity. And you need a good retirement plan. You need to plan your retirement when you own your own business. And in fact, today, in today's business, day and age, really, you need to plan a good retirement no matter what business you're in. So what else do you need? Well, you need to have some advice. Don't try it on your own if you're not familiar with what you're doing. The mistakes that you could make could be extremely expensive. So get some professional advice. If you have a very strong toothache, you don't go to a mechanic, you go to a dentist. If you need to get your taxes done, go and see somebody who has experience in the area you're looking for. So I always recommend a tax professional with small business consulting background or a small business consultant with a tax background, somebody who looks at both. If they don't understand tax, and if you ever talk to an accountant that tells you don't worry about claiming it, there's only 2 words in the vocabulary that you should be using with that person, and that's "you're fired." If you earn any money in business and you do not declare it in either United States or Canada, you are committing a federal crime. I've had people who have made a few $1,000s, and their accountant has said, don't bother claiming it because it's not enough with your expenses. Well, if Revenue Canada or CRA or IRS audit you, they do not accept your expenses unless you have submitted them prior to audit, which means 100% of your income is taxable. Do it properly and do it well. Do not accept, don't bother doing it. Not all tax preparers are created equal. Some of them are lazy. Is there any questions on that part?
Very clear.
Okay, good. I like to be clear on that because we have that a lot in Canada. And I actually had a gentleman who works with the department that writes questions for financial planners, and he was at one of my seminars, and I asked him point blank, what would happen if I didn't claim it? And he said, well, you would have committed a crime. So even Revenue Canada is very well aware of it. With retirement or work-tirement, it depends on what you would prefer to do. Do you want to work all the time or do you want to retire at some point? It's not how much you can earn, it's how much you can keep. So work-tirement, you can look at working until you die, or you can look at retiring. How much will it cost to retire? And where is that money going to come from? If you'll need $1,000 per month in your retirement, hopefully you have no mortgage, no payments, and have never had kids, or you won't make it on $1,000. Do you need $2,000? Or do you need $5,000 to live on per month? Now, don't forget, depending upon where that money's coming from, almost all of it's going to be taxable. So $5,000 becomes $3,700 per month. So again, it's not how much you can earn, it's how much you can keep. Forbes magazine did an article, and they asked Americans, North Americans, middle class, how many of them thought that they would be able to retire. The sad part, or there's 2 parts to it that aren't so great. The first part is that 52% of North Americans thought that they will never be able to retire, that they will work until they die. The sad part is they were wrong. According to current current estimates, 83% of North Americans will not be able to afford to ever retire. That's the sad part. The reason for that is interest rates right now is a major player on retirement. If interest rates drop by 1%, that can delay your retirement by up to 15 years. I don't think we've had enough interest rate increases lately to even consider re-establishing retirement rates. Now, some retirement funds are on the market and have done well, and they may be great. But if you need $5,000 a year to live, or sorry, $5,000 a month to live on, and you can actually find someone who will pay you 5% per year, you need $1.2 million invested to survive. There's not a lot of jobs that are going to give you the opportunity to save $1.2 million so that you can have $5,000 a month to live on. And if you need $10,000 a month to live on, you're going to need $2.4 million in savings. On the flip side of that, where the good news is, if you have a monthly residual income of $10,000, that's the equivalent of having $2.4 million in a bank account. Even if you don't have the money, it's the same as if you did, because you still have the $10,000 coming in every month.
Wow, I didn't know I'm millionaires already.
Yeah, definitely.
Good to know.
Yeah, and it's very hard. And the other part is, don't forget, right now, the biggest interest rates that are available in the market are around 1.3%.
Oh,
And
wow.
this 2.4 million for 10,000 a month is based on 5%.
Wow.
So where will your money come from when you retire? From the government? In Canada, we have old age security and Canada pension plan, or Social Security in the U.S. Will those plans be around, and will they be providing you with enough income? If you have a 401k or an RSP, it will convert later in life to a minimum monthly payout plan. The minimum monthly payout plan in Canada is called RIF. In the United States, it's I have it on my article, but I can't remember the initials now. But when you start to withdraw from it, it has you designed to be broke by 90. So the government does not plan on you living past 90 if that's where your income's coming from.
Wow.
You could have a corporate pension plan. If you do, great. They're disappearing very, very quickly. You can have an insurance plan, so money invested in an insurance program with a guaranteed payout. They're hard to find, and you need a good advisor working with you. Or, of course, you can always work retire. Work retirement means maybe you'll be a Walmart greeter or working at McDonald's. You know, would you like fries with that? It's a good way to retire if you want to. However, I know that in Canada, with the number of retail layoffs that we will experience this year, it's going to be pretty hard for the next 10 or 15 years to become a Walmart greeter. Right? One company alone laid off 14 or 17, 14,000 people last month. So,
Are you talking about Target?
and that's in retail. So it's going to be pretty hard. So what I recommend is having a strategic retirement plan that you control. So imagine that you could have a retirement plan that's going to account. Oh, sorry, I was once got a slide ahead of the program. If you're going to retire, and in your retirement, don't forget you're going to pay income tax. Don't forget you're going to pay mortgage, you're going to pay for utilities, you're going to pay for travel, you're going to pay for medical expenses, car expenses, and you're going to have to be helping your children these days. Because it's going to be more expensive for our kids than it ever was for us, and it's more expensive for us than our parents ever thought it would be. In fact, if you talk to anybody who's listening's parent and ask them how much they would have paid for a bottle of water when they were children, it would have been, they'd slap you in the head for going and paying for it, right? So what expenses have climbed, and they're not going to stop. So that leaves us with a question. If you had your own business and you want to retire, you realize that you can have a business that will save you $3,000 to $9,000 in income tax today, allow you to set up a strategic retirement plan, which you contribute to and that you get returns from, that can fund your entire retirement. And that's the freedom business. And at this point, if you are not with Global Wealth Trade, whoever invited you to listen to, talk to them. They'll be able to answer you on a little bit more on how to answer all of the questions we've talked about, especially the retiring and living well part. Beyond that, is there any questions?
No, we have pretty much answered all the questions during the process. Let me see. Is the registration fee to start up a business like Global Wealth Trade deductible?
Yes.
Okay, that's the answer. Yes. And
yes.
and Tia saying go back to what tax to deduct. She said she bought a winter jacket and boots and clothes. Is that tax deductible?
Where does she live?
In Montreal.
And so if they were nice and she was going to shows, she may be able to write off half of them.
Okay.
If she was in California and she bought that, then I would say 100% because she bought it because she was coming to Canada for a show.
I should go buy some winter jacket.
Right. Yeah. You're not. And it depends because it's the same as food. And the fact that she's in Canada. In Canada, they give us a tax deduction on our tax return automatically that covers personal expenses. So they believe that certain personal expenses are going to be there no matter what. So if it's an expense that you would incur anyway, you can write off up to 50% of it, assuming that you're spending more money on it because you're trying to increase your business appearance.
Ah,
so
good to know.
You're spending on it that they allow you to deduct.
Right,
not
right.
The actual initial purchase.
Right.
Because if you live in Montreal, you need a jacket.
Right. What would the home party expense Glenn was asking? What would be the home party expense be categorized? Like home party, like expense, like you buy things for home parties, like a decoration, food.
Yep.
On
any
the promotion.
Food that you put out, anything that you have for a home party, any decorations you buy, invitations you send out, it's all promotion.
Okay.
All promotional.
Oh, promotion.
If you have home parties at clients, like somebody has a home party and you go there, if you give them anything, if you bring some food or if you give them a 30% discount or you give them a free piece of jewelry or the jewelry box, all of that is tax deductible as promotion.
That's right. Okay. People is asking for your information. Robert, do you mind to give your information out here? Or you have on the first page, right?
Yeah. I think the third page. There.
Yeah.
Now, my email address isn't on there, but it's rwatterson@rogers.com. That's usually the easiest way to get me. I should have it on there. I'm not sure why I don't.
Right.
I'll have to change that.
That's right.
So rwatterson
at rogers.com?
Yep, exactly. Okay. And you can always text too. That's my cell number there, so that takes texts.
That's great. Okay, I guess we have, sorry?
Oh, sorry? One of the things that I do is if you have a question or if you have a client or a potential client who has a question, by all means contact me and ask me the question. There's no cost to ask and answer a question. The cost comes when you don't ask a question.
That's true.
I never charge to talk. I enjoy talking too much to charge for it.
Thank you so much, Robert. This is a great information. I find it's very informative too. So as some other people saying here. So we truly appreciate your time tonight, and you did a great job for the first time doing a webinar. I mean, the technology gave you a little bit difficulties, but you made it. You made it awesome. Yeah, and thank you so much.
I tend to have IT problems even when I'm doing it live, so